Investment markets can be confusing, especially in turbulent times. So how can you protect your hard-earned money and make it work for you? Andrew Wigzell is a chartered financial consultant with the Barnum Financial Group, and he's here to tell you how to ease your financial anxiety. Welcome, Andrew. It's great to have you here again with us.
Great to be back.
These are tough financial times, and for a lot of people, it's very confusing as to how to invest. Is there a link between the market and the economy?
Not as much as people think. The stock market is really trying to take a position on what the economy will be doing somewhere between 12 to 18 months from now.
So basically, what should people be doing when they're looking at stocks?
I think more than anything else, it's not trying to time the market. It's really time invested in the market, looking at what their holdings are and being honest about where they have come over this last 2-3 year period.
Well, a lot of people are doing their own investing and not really relying on a financial advisor. What kind of advice do you have for those folks?
Certainly, people who choose to do it on their own are taking on a big challenge. My view is that better to have a number of people on your team so you can get different perspectives.
What are some of the, I guess, biggest mistakes that they would be making if they didn't have a financial advisor?
I think certainly people tend to look in the micro, what's going on in their life today, and they may not always see the big picture, which is everything from what the economy is doing today to what the stock market's doing to what their overall goals are today versus where they were just even a year ago.
Well, we're hearing a lot about double-dip recession. For those who may not understand what that is, can you explain what it is and what's your take on it?
Sure. Double-dip recession is just a nickname for the fact that we've been in a recession. We seem to have emerged out at the end of last year, the beginning of this year, and there's a lot of concern that we'll be going back into recession later on this year. While I'm not an economist, everything seems to be indicative of the fact that we're not going to see a double-dip recession.
All right, so what advice do you have for folks? You, I'm sure, have clients who've lost their jobs or been downsized, etc. What advice do you tell them? What do you, how do you invest in these turbulent times?
I think more than anything else, the thought is to come in and spend some time with us. This is a judgment-free zone. Certainly, circumstances may have changed in the last 12, 24 months, and coming in and spending some time with us and really assessing what your goals are today and where you want to be in the future is very, very important.
A lot of people do have portfolios. How often should you review that?
My view is that you should review your portfolio at least twice a year. Every time you change the batteries in your smoke detector, you really should be looking at your money. In more difficult times, such as the ones we've been through in the last year or so, it's very important to perhaps have higher contact with an advisor, because advice now more than ever.
What are some of your strategies, especially when it comes to real estate? Because a lot of people have real estate in their list of
certainly, real estate is really a hard asset. It's something that we have to take it part of as when we encompass the entire financial plan. And really being honest about where that is and where it fits into your overall portfolio is very, very important, because particularly if you were using that as an anchor to retirement, you may need to use other assets now to make sure that you bridge the gap.
What should you be looking for when you're looking into investing into real estate?
There are always transactions, whether it's good markets or bad, and now it's all about really high-quality properties as well as location, location, location.
Still location, location, location.
With all of the turbulence in the markets, it's really back to the basics.
Stocks. You see many of them go up and down, up and down. When you look at these stocks, are there any specific types that we need to be looking at?
No one likes to be on a roller coaster where it just goes up and down without any cause for fun. But what we've seen lately is more of an emphasis on the dividends. And there are a number of Connecticut companies that pay solid dividends, as well as those that seem to show positive growth.
And Andrew, you have, for Connecticut-style viewers, a complimentary account review. What is that?
Basically, what we're asking people to do is to go to the Connecticut-style website. If they that'll link you to the Barnum Financial Group's website. If you just indicate that you'd like an account review and you saw it on WTNH, we'll be happy to spend some time with you going over your particular situation.
That's something that everybody should really have, or at least should be doing if they have something that their portfolio.
Certainly, Jocelyn, as I mentioned before, advice now more than ever.
Thank you. And if you want to get in touch with Andrew Wigzell, all the information is on the screen, or just come to our website and we'll have the information for you. Again, thank you, Andrew. Coming up next, author Lila Blake Ward gives us her take on how to succeed at aging without really dying when Connecticut Style returns.